All right. So today we're just going to discuss broadening formations, and we're going to discuss like the multiple ways that we can train your brain to see it, because most people think it's all about perfectly drawing broadening lines to try and time when this is going to happen here, right? To perfectly enter the trade. Now we don't have to do that. We can, and we prefer to do that because we get much better risk reward, but we don't have to trade all the stuff before it. We just need this one trade here. And that's going to dive into the first thing. And this is something we coined recently, but it's called this. They buy, so it goes up, they sell, and then we buy. And the whole idea here is really simple. And this is why most people lose and most people don't trade very well. It's because they're timing their entries improperly, where they're not creating a winning trade. And what a winning trade looks like is this. So you had people who were in a position, and my snipping tool looks like it may be broken here. So we'll probably just end up using this. But you have people who are in a winning position, it's going up. Then all those traders are forced out. Because when you have price that's going up like this, what people are doing is they're putting their stops at obvious pivots, obvious lows, or they're putting their stops where they got in, or they don't have a stop, right? If they're an investor or whatever it is. However, the investors, those are the people who get the most screwed. Because when price changes direction and it reverses, what's happening is you have a seller that enters the market and you force anyone long to get out. So what happens? If you wanted to buy it, you bought it, then it starts going the other way, and now we trigger stops in the other direction. Anywhere in this range, there can be stops. Doesn't have to be at pivots or levels or anything. So this causes price to speed up, because when you go back through a range of people who are long and you have an aggressive seller, the longs are selling and the sellers are selling. Everyone's selling, right? There's nothing good's happening there. So then when it reverses and starts going the other way like this, now what's happening? Well, everyone got short, or they got out of their longs, because you have a seller in here, they're selling short, they're also selling their longs. So when it reverses, anyone that was long is out. So those longs that bought in here, they were aggressively buying, they come back to buy more because the market has now firmed up. It's reversed. And anyone short now has to cover. So we're pairing shorts with aggressive buyers. We're pairing longs with aggressive sellers. So what it looks like is this, right? All the people buy, and then everyone tries to get short, and then the buyers come back, and now all the shorts get screwed. So what does that look like? Well, let's go to Palantir, right? We know Palantir's been going up this year, so we'd prefer to buy it. When do we buy it? Well, we want them to buy, then we want people to get short, we want to stop them all out, and then we want to buy. So we know once we've made this new low, that's when we would like to be going after it. What if we miss that? Well, it's going to happen fractally. It's always going to happen. They buy, then they get stopped out, and then we can buy. And you can see we have a target built in. We have a place where we'd look for longs built in. So the target gets hit, and that was it. And then you can see it goes really far sideways, right? And this is where you're going to get killed if you're trading in the middle. Then eventually you'll see there's some slight buying, then they sold, and then we can buy, right? It's really tiny range before that. But if we can time our entries like this, then when we're right, we can be really, really right, because we have a big range and we can gauge how far it's going to go. Because if we know we're buying here and they sold from here, we want to target the sellers. We want to take them all out. So if we're buying, right, we want to stop them out and then target to take out all those shorts. And then if we are really right, it'll stay up there and it won't come back. So let me just show you some more examples. Uranium on the monthly. You can see it's really sideways in here. This is where we prefer not to trade. Then they sold, or they sold. So we can buy it, right? And then you can see they sold, they bought. We can also sell it. And then you can see they bought, they sold. Now we can also buy it. This is all price is always doing. So when this reverses down at the lows here, we can target the other side of that range. And this is a big trade. It looks something like this. right? If we're just going straight off the monthly chart, looks something like this, right? We have this big range. Now, you may look at this and be like, okay, what about the sideways stuff, right? What is that telling us? This is something we called the box setup. And we taught this a very, very long time ago. This is from 2022, this screenshot at least. And we have some from earlier. But it's the same concept. Oops. I don't know what's going on with my tool here. Let's see. All right. But it's the same concept. So when price is consolidating, going sideways like this, what's happening is the same thing's happening on a smaller basis. But since we're not triggering, right? It's like they sold. Say, okay. Then what? Well, it didn't take out the highs. It didn't take out the lows. So they sold and then sideways, right? That's just wrecking traders in here. So what's happening is they sold and there were some buyers, and then the buyers and sellers just aren't aggressive. It's going sideways. So if they're not aggressive, we just don't want to trade it. Because eventually you can see a big buyer does step in. Okay, they bought. And then we can look to try and target the other side, because you can see they sold and then it went sideways, and then they bought and then we sell. Same thing. And we can also frame it the other way, right? It's like you can see they bought, they sold, and then we can also buy it in here. With the box setup, what it does allow you to do is play retests and have, support and resistance levels. So people who like trading off of levels, they're going to like this more than the broadening formation. Because the broadening formation, you're gonna have to draw it out. Whereas with the box setup, or in this case, right, we don't have to really identify perfectly where to put the lines or anything. You just draw out where you see price going sideways. So if we just go to, like, let's say a daily here, we can look at the chart and we can just see where price wasn't really moving, right? And we can just put a box around it. Say, okay, well, it's going sideways, 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 new low, and then it comes back in. That's where we want to start playing it, right? You can also see it sideways in here, right? It was moving, yes, but it's up and down and up and down, up and down. So this whole range, and they're just chopping them up, new low, then it comes back in. And this is a simple way to do it. Now, is this the best way? Not in my opinion, but it allows you to, especially if you're trading futures and stuff, which tend to consolidate, you're going to be able to pick up on those just relatively easy. Your eyes instantly are getting drawn to where's price going sideways. And then you want to get out of that range and either reclaim it or stay out of that range. So you can see, in this case, this is a breakout, right? In this case, it was a rejection. We prefer the rejection because it's normally a bigger move. And this is going to be happening everywhere. You can see it gets stuck in sideways here, goes up, then it goes down, and then it goes up. So you can play using those levels as reclaim levels, as support and resistance levels, however you want to look at it. Now, all of these things are doing the same thing. It's forcing your brain to see where the broadening formations are, where we say the threes are. So when we look at a three is simply this, where we can see price makes a new low, rejects, and then makes a new high to the previous range. So if this was like a 60-minute chart, the 15-minute chart might look like this. This is the same thing. You can see this would be the first 60-minute high and low. This would be the new 60-minute low, the new 60-minute high. So you can see within this bar, we're having that broadening formation occurring. This is how price discovery is going to happen. So when we see a scenario 3, we know that's what's happening in there. What this also tells us is, since we know 3s happen, and it looks like this, where you can see it makes a new low, it changes its color, and then it makes a new high. Or on a bearish 3, makes a new high, changes color, then it makes a new low. We also know what 3s look like as they're trying to occur. And it looks like this, right? If it was a bearish 3, goes new highs, then it changes color. That's what it looks like right before it makes new lows. So that's one of the types of signals we look for, right? It goes up and then it changes color. Now it's going the other way. Now, to know that it's still working, we want to make sure price doesn't reverse. So in one bar, right, it's all happening in one bar. So it went red and it just kept going. In 2 bars, goes up, it went red, and then the next bar, it just kept going. In 3 bars, goes up, goes red, keeps going, right? In 4 bars, goes up, goes red, keeps going, keeps going, keeps going. You can see we're just simply adding more directional bars here. Now, if it's going to fail, what will it look like? Well, it's going to go up, going to go red, and then it tries to keep going, and then it changes, right? And now at that point, it's trying to go 3 to the upside if it's going to work. So you can see a failed setup looks like it changes its color and then it reverses against us. So what we like to see is we want really big ranges, right? Let's just say we have the box set up in here. We want really big ranges, and then we get a reversal, and then it doesn't reverse, where it just keeps going higher lows. This is the ideal trade because we have, in this case, the box setup. It's also a broadening formation. It's the same thing. And then we have reversals to go in there and say, okay, well, it's this all is going to be a 3 to all of this stuff. The second price reverses. That's what's trying to happen. So when we go and look at charts, we can look at a higher time frame is normally going to make this easier. We suggest using the day, the week, month, quarter, year, because it gives you the really big 3s that give you really big moves. So when we go to a daily, for example, I'll just zoom in, or this is a 12-hour, but same thing. What you're going to see is a 3 is a broadening formation. So they sold it down, they bought it up. So they sold, they bought, then what? We sell. So in this one bar, they sold, they bought, and then we sell. Right? That's how we can play 3s and broadening formations. Now, as far as how we would draw that and see that, these 2 bars went scenario 3 to all of these bars on the left. And then it changed color here at 6:4:30, and then it reversed here. Notice the change in color happens, then it reverses, then it goes to the other side. And you can see it then expanded, it got bigger. So now these bars, 1, 2, 3, 4, went outside of all of these bars on the left. So this is now a 3 to all of this price action. Right? And then it reversed, it changed color here, 6:2:32. It reversed here, right? And then you can see it's trying to do the same thing the other way. Now in this case, right, they started chopping them up. And this is where, once we have bigger time frames, we can call this corrective and say, okay, well, it reversed down, yes. If it's going to keep going, that's what it would look like. But if we change back to green, that buyer that bought down here, they're coming back. And then it comes back in, yes. But then it goes back green and the buyer's back. And it comes back in, yes. Then it goes green, the buyer's back. So we call this corrective, where you're stopping people out on the way to take out the much bigger targets. Now, if you have any questions for those in chat, let me know. We will take those, so type them out if you have questions. But if we go to, let's say, the quarterly SPY, the quarterly futures, 3. So what do? They bought, they sold, right? Because it went up and then back down. Then you'll see it went new lows, so they kept selling. Changes color, where's it going to go? The high of that, 3-3. So if we go to the month, what does that look like? Well, notice, we're 2 down, changes color, reverses, goes the other way. So we're going to see, right? In order to get that 3, right? We have this 2-2 reversal is what we call it. Same thing as this. So when we look at a smaller time frame, this monthly 2-2 reversal is doing what? Creating the quarterly 3. So if we look for 2 months, second month of the quarter, or the third month of the quarter, that can cause an outside quarter. The second month is when we want it. So that's what happened. The first month went down, the second month reversed. That's trying to go outside bar. A 2-2 reversal creates a combined 3. Yes. We would call it a compound 3. So for example, right, here's another example. See this 3 on the quarter. First, it took the previous lows and then it came back in. Then it changes color. Then it becomes a 3. So we have 1, 2 places where we know this is trying to happen. We go to the month. The 2 down month, 2 up reversal. This occurred on the second month of the quarter. That is what causes it to happen. And since we have a target, we know this month and this month it was trading higher. Then when we go down to like a 4-hour or 60-minute, that's where we are going to be trying to time those broadening formations, the box setup, the whatever you want to call it, in that direction, right? So this is where the quarter came back and reclaimed. You'll notice this was the previous quarter's lows. See how it goes up and then down, and that's where we buy it, and then it goes and you're in, and it never comes back to where you bought it. That's how we want to trade it. We want to create this position, rips up into the new highs, keep that stop break even, and if it's going to go, it's going to go. Ideally with shares, right? But it's the same idea with everything else. And you'll see, right? They bought it, they sold it, and then you can see it goes to new highs. They bought it, and then they sold it, and then we buy it. So not everyone is going to just go and never come back, but that's why we have targets. So when we see this target gets hit, we reduce or defend by exiting the trade if it does not stay up there. Then this buy occurs, and you can see it stays, and then it expands. And then the same thing's going to happen. You'll see we get some consolidation, right? There was attempts at buying. They would have stopped you out. So be it. If we're looking for the box setup, new low, gap down. What happened? They bought, they sold, right, on this time frame. We can also see they bought all of this, took them out. All of that could be your reward, right? And you'll see the same things in here. They bought here, sold here, buying here. Just making sure we're timing it at the right places. So what I'd suggest, if you want to learn and get better at this, is go to the big time frames and just look, right? Like if we go to Lulu on the month, can we see it, right? They sell, they buy, or they sell, we buy, right? They buy, and then we sell, and then we buy, and then we sell, right? And then you can also start seeing the smaller ones. They sold, they bought, and then we sell. And what you want to do is once you can see them, you want to look for the biggest ranges you can find. So if we go to like Hood, you can see they bought, they sold, they bought again. Right? Go to Palantir. They bought, they sold, we buy. Right? And these are just really big examples, but I want to show you this is how we want to think. The bigger the time frame, the stronger that is. It's like we go to a yearly, it gets really clear really fast. They buy, they sell, we buy. Broadening formation. And you can see this signal creates a 3, these 2 bars outside of that. And that's a broadening formation. And then it changes color here. And then it reverses here. And then it continues. We go to, let's see, BBAI, right? BBAI on the month went 3. They bought, they sold, we buy. Right? The bigger this is, the better. And you could frame it however you want. You could say they bought, they sold, we buy. Doesn't matter. You just need to make sure we're doing that. What if we get a Figma? One we traded. I traded it off of this weekly in here, like this. You can see Figma. They bought, they sold, we buy. And you'll notice when this happens, the month is green, quarter's green. So we have that higher time frame. What? 2 down green month right there. Boom, 3. So we want to time those lower time frames at the bigger time frame. What do you guys think? When do you get in on a 3? At the beginning of it. 2 down in green, 2 up in red. Been studying for a year. What I'd suggest is that you have to have focus, right? What's your trade plan? If you can't tell me your trade plan, then there's not much I can do. Because if you can just trade 2-2 reversals and time it with this, the only thing you have to know is your plan. And you can be like, a lot of people like to day trade and stuff. It's gonna be a lot more difficult. The bigger ranges are gonna be much better. Like eBay was a really good one from previous weeks. They bought, they sold, then boom, we buy. So for example, second week of the month this week, let us go here. Beam just turned green on the year. Let's see. Yeah, so you can see same thing in here. Now we would consider this, right? You're digging in the dumps. So penny stocks and stuff like this, we don't know, as far as on a fundamental basis what they're going to do. However, the point still stands, right? NTLA, same thing, right? $7, now it's 25. Maybe it goes to 210. It's all about, can we see that this is a 3? Right? New high, new low, comes back in. New highs is way, way up there, right? It might take like years, but that's what price does. Right? We do an ARC. Look at ARC. You see the 3. Outside year, broadening formation, new high, red. Then it reverses here. Then it makes the new low. Then it changes color. And then it reverses here. And it continues. Right? You can see it's going to change color, then reverse, then new low, then change color, then reverse. It's always going to be happening that way. Gosh, 1 second. Broadening formation, yeah, it's really important on your entry time frame too. So this is like, you have to look at this, right? ARC. We start at the year and we're like, okay, ARC. Where's it going? All-time highs. Okay, cool. When do we know that? When the year's green, right? If we're a yearly basis, just when the year's green, that's when we would know that. So we can say if the ARC is green on the year, it's going all-time highs. We have this target intermediate, right? 97. Okay. Then each month of the year on ARC, we track the 3. 3, broadening formation. 3, broadening formation. 2, broadening formation expands, it gets bigger. These 2 are now the 3 to these 2. Or to these 3, actually. You can see it gets even bigger. So this 3 goes to this, right? And then it expands and takes all this stuff out too. And then the 2 down in green, that's when you buy. Because they bought it, they sold it, that's where we buy. If that works, what does it do? These bars go 3 to these bars. Because we know a 2-2 reversal, it's trying to cause this to be a 3. Right? When this goes green on the month, that's what's happening. When it reverses above this month's highs in May, that's what's happening. When it continues in June, that's what's happening. When it continues in July, that's what's happening. When it goes inside month, hasn't done anything. When it continues in September, that's what's happening. When it continues in October, that's what's happening. So it started happening here, 47.54, and it's still happening 91.75. So you can see this occurred here. It changed the year to green. Now the yearly broadening formation kicks in because the year is green. Then it's gunning. So if you're day trading all year, right, you didn't have to nail it down here if you didn't want to. Then the rest of the year, it's simply, okay, did ARK stop anyone out yet? They bought a little, they sold a little, I'll try. They bought a little, they sold a little, I'll try. Boom, big winning trade, I'm going to hold. They bought a little, they sold a little, buy it down here. Boom. And it doesn't come back. They bought a little, they sold a little. Boom. Right? And you can see it's just they bought, they sold, then boom. They bought, then they sold, and then boom. Right? It's just all that's happening. And if you're trying to get bigger winners, right, the bigger range is ideal. So you can see they bought, they sold right here. Boom. And then it access support. You can see they continue. And within that, you're going to get the same thing. You get the box set up. They bought a little, they sold a little, boom. Right? It's just happening all the time. It's a matter of what basis you're going to do. If you're a daily guy, every day things are changing. If you're on the weekly, it's every week instead. So it's like this whole time they're just buying. And then what? They bought a little, sold a little, reclaim, right? And you can see they continue to hold that. Then they bought a little, they sold a little, and they go after it. So it's just what time frame are you going to use? Obviously the monthly is easier. Buy it on the month and you're just holding. It's been 183 days. Go to SPY. They bought, they sold, and then you're holding for 183 days, right? Semis. They bought a little, they sold, new low, hammer, you're holding 183 days. Technology sector, bought, they sold, you're holding, right? It's just all the same thing. It's just time frame. If you want a big time frame, big monthly move, you've got to go on the big time frames to find it. You can't find a monthly move on a daily chart. If you're swing trading, you should be looking for exactly what I just showed you right here. Same thing I'm showing you here. Never been more profitable with the TTO. I love that. That's awesome. But like, we have an indicator that kind of shows you. You make new lows, that's when you buy it, right? Now this indicator plots late. So it doesn't plot until when this bar opens in May. It does not plot until this bar opens in September. But since we're human and we have eyes, right, to see new low here, the second that happens, you know. The new low here, the second that happens, you know. And that's where you're going to time your daily signals if you're a swing trader. You can see down in here, right? It does make the higher low. Could have been trying to time it. It did make the 3. Then it makes the lower low again. That's where you're trying to time it. Boom. Here, COVID, boom. 2018 crisis, boom. You go all the way to the .com, right? SPX. Let's go to the quarterly or the yearly. Actually, the 08, not the .com. If we go to 08, right? They bought it, they sold it, makes a higher low, boom. Higher high, reversal, that's a 3. Boom, that's a 3. 2 year, where's that going to go? 3 up in here. And then it keeps going, expansion. And you can see in recent years, things have just simply sped up. So each year is like 2 years, or maybe each year is like 4 years prior to, 2010, 2013. So when we look at a monthly chart now, this is like a yearly chart 15 years ago because of just how fast things are moving and the printing of all the money, Nope. When you make new lows, that's when changes occur in continuity. So think this way. If let's say we're trading a weekly chart, let's say we go like this, we make new highs. Okay. The next, Wednesday morning opens. The day goes red. Thursday continues. What is this doing now? You made new highs, and then the daily guys and the 60-minute guys started selling, which does what? Sets up a weekly signal. And then what? The weekly guys started selling and reversed it. And now we're going to go, this is a 3 to that. When continuity changes here, that's when things change. So let's say the year opened here, and this is a monthly chart. When the month goes green here after new lows, the yearly guy who was selling is gone. The second that goes green. And we are coming after new lows. So everyone that was long, they're out. Everyone is short. The second the month goes green, all the shorts are in trouble. They got to close their shorts. Boom. And then you short squeeze up in here. And now everyone's long. Grandpa's talking about the stock. Your taxi driver's talking about the stock. Everyone bought it. And then Goldman Sachs goes, you know, this is overpriced. I'm going to sell my billion share position. And then everyone else is like, yeah, we're going to follow suit. We're also selling. Boom, takes everyone out. And if the company's any good, it does this, and it keeps going. So changes in continuity on lower time frames after you've made new lows or new highs are what set the broadening formation in motion. Like, how do you can't expect this monthly hammer to form without a change in weekly continuity. So if we just take a rectangle, we just draw out that whole range, right? Can we see where the weekly guys started buying? Yep, right here. And we actually called the bottom in here on Monday morning. We're like, that's a buy. And then we had the fastest rally ever in market history right after it. And you can see the week goes green here and they're buying this week. So anyone that's selling on the month, they're gone. Selling this year, quarter, they're gone. Then the next week opens here. Or actually we had, the new week here, Monday. The sellers came back. Then we had Monday, Tuesday, reverse. Now the buyer's back. And then the month changes and the quarter changes after the weekly guys bought it right here where we buy. And then now see how the quarter and the month changed? This is better than any moving average because the month and quarter are green. We know it's a buy, 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 buy. Right? And then the year goes green and now you're just buying more. But see how the weekly changed first. We go to a weekly time frame. The week goes green here. Boom. Then it goes inside week. Then it goes green here. Boom. Continues, continues, continues. And they stop some guys out, and then they continue. Stop some guys out, continue. A monthly signal will never trigger a daily signal. It's not possible. It's always the other way around. The day can trigger the week can trigger the month can trigger the quarter can trigger the year. Or you can have a day that triggers a year, right? A week that triggers a quarter. It's never a quarter to trigger the week. I don't think it feasibly can happen. Well, if you guys have any questions, let me know. I'm going to be hopping off in just about a minute. You can see SPY right now. Remove the 60 from here, but you'll see they buy, they sell, boom, starts coming back. And you see on the day, right, a 3 is a broadening formation. See how we made new lows to yesterday's range and new highs? What does that tell you down here? Box setup, right? Time a signal, buy it. It's like this. You want to get back in that range and start chugging back through, take some shorts out. Higher lows because we want to start our entries on new lows. Because the best entry is after everyone else gets out. New low, that's the best entry. New low, that's the best entry. Right? Versus timing higher lows in here. It's a good entry, yeah, but we want to time when we buy, we create a winning position after a new low. Then we can add every time a higher low is formed. So if we turn this back on, we can time that bigger time frame buy, and then every higher low would be like a 60-minute time frame where we buy signal. So it's like buy the big time frame, add. Right? Hopefully that makes sense. They look like TTO. They are. We go to a really small time frame. You can see in this whole section. That's when we want to buy. That's when we want to buy. That's when we want to buy. That's right. Some of these are going to be missed because the indicator is just not perfect, but hopefully you guys enjoyed the vid. I do have to get going. I'll see you guys in our weekend vid coming out Friday. And if you are in stat, I wasn't out here in the morning. I had my birthday yesterday, so I did take the liberty to sleep in, which, you know, there's nothing new under the sun. So if you've been trading with us and you know what we like to do, you got the gap up sell, because we did the same thing on Monday morning. So, or not Monday, Tuesday morning. So you need gap up sell here, and then buy it back down in here if you're going to be trading after that outside day. But adios, everyone. I'll see you guys in our vids, and check us out at stratalerts.ai.